Borrowing money means taking money from someone with the promise to pay it back later. It's like a temporary loan. People borrow money for all sorts of reasons. Sometimes we need to make a big purchase, like buying a car or a house. These are usually expensive, and most people don't have that much money saved up. Other times we might need money to cover unexpected expenses, like medical bills or car repairs. Life can throw surprises our way, and borrowing can help us manage those financial bumps in the road. Starting a business often requires a significant amount of money. Entrepreneurs often borrow to fund their ventures. Borrowing allows us to get what we need when we need it, even if we don't have the cash on hand immediately. It helps us achieve our goals and handle life's unexpected turns. In essence, borrowing bridges the gap between our current financial situation and our aspirations or needs. Getting a loan from a bank involves a few key steps. First, you'll need to figure out how much money you need to borrow. This requires careful budgeting and planning to determine the exact amount required for your purpose. Once you know how much you need, you'll approach a bank or financial institution to apply for a loan. During the application process, the bank will ask for information about your income, expenses, and credit history. This helps them assess your ability to repay the loan. They want to ensure you're financially capable of handling the loan repayments. After reviewing your application, the bank will decide whether to approve your loan request. If approved, you'll receive the loan amount and begin making regular payments, usually monthly, to repay the borrowed money along with interest. This interest is essentially the cost of borrowing money. Banks offer various types of loans to cater to different needs. Personal loans are versatile and can be used for a wide range of purposes, such as home renovations, debt consolidation, or unexpected expenses. They typically come with fixed interest rates and repayment terms. Home loans, also known as mortgages, are specifically designed for purchasing a house or property. These loans usually have longer repayment terms, often spanning 15 to 30 years. Business loans, as the name suggests, are tailored for business needs, such as starting or expanding a company, purchasing inventory, or investing in equipment. These loans may have varying terms and conditions depending on the lender and the business's financial situation. Section 4. Anna's Journey: Securing a Personal Loan for Education. Let's consider an example. Anna, a young woman passionate about pursuing a degree in computer science, needs financial assistance to cover her tuition fees. Determined to achieve her academic aspirations, she decides to apply for a personal loan. She carefully researches different banks and compares their interest rates, loan terms, and eligibility criteria. After selecting a bank that aligns with her needs, she submits her application, providing all the necessary documentation. The bank reviews her application, assessing her financial stability and creditworthiness. Upon successful verification, Anna's loan is approved, and she receives the funds needed to pursue her education, embarking on a path toward a brighter future. Section 5. Borrowing Responsibly: Tips for Successful Loan Management. Borrowing money can be a valuable tool for achieving your goals, but it's crucial to borrow responsibly. Before taking out a loan, carefully consider your needs and whether borrowing is the right option for you. Create a realistic budget to determine how much you can comfortably afford to repay each month without straining your finances. Compare interest rates and loan terms from different lenders to secure the most favorable terms. Once you have a loan, make timely repayments to avoid late fees and maintain a good credit score. Remember, responsible borrowing involves careful planning, realistic budgeting, and timely repayments to ensure a healthy financial future. Section 6. Conclusion: Making informed borrowing decisions. Borrowing money is a common practice that allows individuals and businesses to make significant purchases, cover unexpected expenses, or pursue opportunities. Understanding the process of securing a loan, different loan types, and responsible borrowing practices is essential for making informed financial decisions. By carefully considering your needs, exploring available options, and managing your loans responsibly, you can leverage borrowing as a tool to achieve your financial goals while maintaining a healthy financial standing. Remember, responsible borrowing involves careful planning, realistic budgeting, and timely repayments to ensure a healthy financial future.